Welcome to our weekly Forex and Futures forecast. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. My name is Jay Norris. I've written a couple of books on trading. Our most recent, The Secret to Trading, which really spells out the theory behind the methodology that we teach at Trading University. That is risk tolerance threshold theory. It's a pretty heavy book, pretty helpful. We spell out how it helps us determine which market we're going to trade and which direction we're going to trade that market from. Hey, let's get right to the charts. The first part we're covering the Australian US dollar. First thing you see is the Aussie is down at these levels that you're actually be able to make money from buying at 2011 to 2012. Well, what's different this time around? We think what's different is you have a completely different environment in commodities. You're actually seeing weaker commodity prices. We feel you're already at the end of a secular bull market in commodities, so we don't think that the Australian dollar benefits from higher commodity prices going forward, and we'll point out some of those commodities or futures prices to you in a little bit. So, momentum down hard on the Aussie. This is a weekly chart. If you can go to a daily chart, you're going to see the same thing. Momentum down hard. Go down to a 4-hour chart, and it looks like you're going to see the same thing. Momentum down. Albeit you had a little bit of support just above 96 even, which we would almost expect that. Wouldn't mind seeing a counter trend rally here, but we think that would just prove another opportunity to continue to sell this guy. So, yeah, weakness in the Australian dollar, momentum down pretty hard. We don't necessarily see that going away right away because we think, if anything, you're at the beginning of a big shift in the commodity markets. We're not calling for a bear market, but they could certainly go sideways from here, which would probably keep Australian dollar pinned down also. So not looking for a quick turnaround in the Aussie, this time down. Next market, the Euro US dollar. We see continued weakness in the U.S. dollar. You had a short-term shift in direction at the end of the week. It really couldn't hold its gains on Friday, though. So, that doesn't bode well longer term. If you go out to the weekly chart, you see a pattern of lower highs for 5 years now. So that's powerful. Lower high, lower high, lower high. Still on down to the daily chart. Most recently, you have a lower high there, too. So we see likely continued weakness in this market. There it is. You could see that happened to be a 50% retracement price stopped at there. This happens to be a little shorter term 50% retracement, but again, that same bearish pattern, that same scale to it. So you get up around a 50% retracement, this guy, it finds resistance. So that's characteristic of that market. We think that's a reflection of an overall bearish environment. So we still like selling rallies in the Euro US dollar. Next market, dollar yen. Dollar yen started to show a little bit of a shift in momentum here. You can see it on the MACD. I don't know how serious to take that market. It's been a great trading vehicle on the way up. The market's got to prove us wrong. It's got to start not giving buy signals that work in order to get us to shift. So just because momentum's shifting, we've seen that happen before, and it happened to be relatively short-lived. So that's not a big deal for us. If anything, we would welcome a retest of that 100 level. So we're definitely eyeballing 100 for possible support. And you can see if I go down to a 4-hour chart, I've got support marked in there along the way too. So to me, you've got a buy zone on top of a bigger buy zone. So we're definitely not coming off of this guy. We're definitely still focusing on dollar yen on the long side, even from a shorter term day trader's perspective too. But if it starts to give up, then we'll shift. So we're not going to back off from taking advantage of the long side in this market until the market shows it's different. So far it hasn't. 101 is still holding, let alone 100. So we see support at 100. But you know what? If you can't get to support at 101, you're not going to get to 100. And if 101 holds, it'll be back on the upside. We want to be there to take advantage of that. Next market we'll cover would be the U.S. stock market, S&P 500. There it is. Let's go to the daily chart. And, you see that big line there. We kind of mark that as a breakout, too, and that would be considered a breakout. That's the old all-time high, that heavy black line. So if I go back out to a weekly chart, you can see that's the all-time high. Essentially, you had that massive double top there where U.S. stock market's been going sideways for 13 years. Now you finally have a breakout here. Here's another one similar, the dollar yen, where, you got to take the breakout seriously, and we wouldn't mind seeing a pullback here perhaps to that old level, the old resistance level, to see that become support. Nonetheless, though, that may be a little premature because this market's awful tough, and again, it's really rewarding traders on the long side, and that kind of builds on itself too. So we certainly don't want to fade that. If anything, we want to continue to try to take advantage of that upside ourselves. So yeah, potential shift in momentum here. Hard to take it seriously when you can see every other shift in momentum in the past has been short-lived. So we don't see a reason to come off what you're doing here, especially if it's working for you. Let's cover commodities really quickly because I think that is what makes things different for the Australian dollar this time around. Let's look at some of the food commodities. Here's wheat. We think potentially wheat is about to turn a wide corner here. Here's the longer-term weekly chart, and you could see you're a long ways away from the all-time high in '08. You did make a higher high in 2012 to 2011. However, in the big picture, you're still ways off that high, and we're thinking if this potential trend line gives way, that signals a shift in this great secular bull market that has been the commodity markets for so long. There you can see it, the big picture where the price of wheat came from. It used to be between $2 and $3. Now, it's at $7. It got as high as 13. But if in fact it is on the way down, if in fact we're going to potentially see at the very least sideways, if not slightly lower commodity prices, then it makes sense that the weakness in the Australian dollar does start to make sense. Here's another commodity, would be copper. And if China's done with all their building, which we think they're close to that, we're not saying you're going to see a slowdown, but if they're done with most of their buildings, most of those cities they built, then there's going to be a whole lot less demand for this commodity and the other commodities that Australia does supply too. So here's another long term. This is a weekly shift, a weekly chart. So if in fact this support becomes resistance, and now we see a new downtrend, that would probably continue to pressure Australian dollar lower. It's also dollar bullish here, and we think this goes a long way in explaining why the stock market, U.S. stock market, continues to stay strong in the face of a stronger dollar, while asset class markets like the Australian dollar go south. We think commodities is the big reason for commodity weakness, is the big reason for the shift in correlations that we've seen lately. Oh, gold. Did we touch on gold? Gold doesn't look half bad here. It's stabilizing at a level we would almost expect it to. That's support for us. That's a risk tolerance threshold level there. I wouldn't consider sniffing out buy signals just yet, though. To me, I'd love to see 1100. Give me 1100. Give me that long-term trend there. Let's see if it reverts all the way to that long-term trend. That'd be an interesting level for me, 1100. Yeah, it's starting to stabilize here. You could see support again at 1300, but for me, momentum is still down. You still have a pretty good seasonal into this market lower into mid-June, so let's see if that seasonal holds out. Wouldn't mind sniffing around the gold market around 1100, though. So we see continued weakness in commodities is likely keeping Aussie dollar heavy. We think the commodities, the euro, etc., the pound, you'll continue to see weakness there also, and that all this, doesn't necessarily mean a weak stock market. Meaning a strong dollar doesn't necessarily have to mean a weak U.S. stock market, although we'll continue to monitor that. Hey, thank you so much. If you want to know what's going on at Trading University, come and see us. You can click on courses to our live market analysis trial. Click on courses, live market analysis trial. And there it is. You can come and see what we do. We demonstrate the tactics that we teach in live markets every Monday and Thursday. So we look forward to seeing you there also. Thank you so much, and we'll see you again next time.